Hello and welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking this evening. No sealed cover. The Supreme Court rejects the government's move to submit its suggestions on setting up an expert panel on investor protection in a sealed envelope after the Adani controversy. The court orders for copies of the government's reply to be shared with petitioners and reserves its judgment. Adani Group stocks remain under pressure. The group's market cap erodes by another 10,000 crore rupees today. Billionaire investor George Soros questions Prime Minister Modi's silence as the controversy can spark the revival of democracy in India. Union Minister Smriti Irani hits back, accuses Soros of attacking India and attempting to weaken democracy. The sensex and the nifty snap a three-day winning streak but managed to end the week in the green. A CNBC-TV18 analysis shows 56% of nifty companies have seen their earnings estimates downgraded. Auto component maker Minda Corp acquires nearly 16% stake in rival Pricol for 400 crore rupees in the open market. Pricol's managing director says the company is not for sale, claims to have the backing of institutional investors. Minda Corp says this is merely a financial investment. IndiGo is back in business, says CEO Peter Elbers after a strong third quarter. Confident of achieving the higher end of the 13 to 17% capacity outlook, expects 40 new aircraft deliveries in 2023 and upbeat on international operations, hopes to add 10 to 15 new destinations both at home and abroad. That's an exclusive. After sacking 90% of its India employees, Twitter scales down its operations even further, shuts down offices in Mumbai and Delhi, continues to operate the Bengaluru office, which houses a few engineers, as Elon Musk's mission to slash costs continues. Less than 100 days before the state elections, Karnataka's Chief Minister presents a revenue surplus budget with no tax hikes. Total budget outlay crosses 3 lakh crore rupees. Bengaluru gets more funds to expand metro roads and drainages. Neil Mohan becomes the new chief executive officer of YouTube, joins the long list of Indian origin CEOs leading big tech companies. The 49-year-old was previously with Accenture and Google before moving to YouTube. The US is not looking for a Cold War with China, says President Joe Biden. Expects to speak with Chinese President Xi Jinping over the balloon incident, but rules out any apology to China for taking down the balloon. Also clarifies that the 3 other unidentified flying objects that were taken down are not related to China. Let's go straight to the big story this evening. The Supreme Court has rejected the government's move to submit its suggestions in the Adani case in a sealed cover. Calling for more transparency, the court said that the proposals made by the government to protect investors in the wake of the fall in Adani stocks must be shared with the petitioners as well. The court has reserved its final order in this matter. Ashmit is standing by now with the details. Ashmit, take us through the observations that came in from the Supreme Court and where this now leaves this matter. And once again, give us the background for what the PILs are suggested to the Supreme Court to start with.
Well, let's keep in mind that it's on Wednesday that, in fact, the Solicitor General, while appearing before the top court, had said that, look, the government does not want to spook the markets, does not want to spook the investors, and therefore any suggestions coming from the government on the way forward should be in a sealed envelope. At the time, the Supreme Court had not said much, but today, when the matter did come up for final hearing, in fact, the CGI, Justice Chandrachud, made some very pointed observations. At the very outset, he mentioned that he cannot permit sealed cover submissions, especially in case of such an expert committee that is sought to be constituted. Further, the CJI went on to observe that in the spirit of transparency, it's important that the government stance is known to not just the judges, but also to the petitioners, and towards that end has directed for the government submission to be shared between all the stakeholders. The Supreme Court said that any such expert committee that is to be constituted, if done under the garb of a sealed cover, will give the impression that it's a government committee that is in fact looking into the issues, and therefore it will not enjoy perhaps the full confidence. And to do that, the Supreme Court said that we will take the mantle upon ourselves. We will be the ones that will constitute this expert committee and suggest the way forward. As far as what the way forward looks like, well, there are a few aspects to consider. At the very outset, when this matter was considered for the very first time, the concern that had been expressed by the Apex Court was investor protection. Even today, the CJI observed that lakhs of crores of investor wealth has been eroded. But above and beyond that, the petitioners have made a number of contentions. To begin with, the petitioners themselves have also sought a copy of the government submission. Secondly, they've also sought relook at the nature of pledged shares and the inflated rates at which the banks have offered loans on the back of these pledged shares. That is an area of investigation that has been sought. Another concern that has been expressed is, in fact, the role that has been played by public sector banks in terms of discharge of these loans. That is another focus area of investigation that has been sought in the petitions. The petition also seek a relook at the corporate governance issues that have been red flagged in the Hindenburg report, also go on to raise questions about the LIC and suggest that an expert committee should enjoy the full trust of the confidence. Now, towards that end, the Apex Court has pointed out that it will neither take recommendations from the government nor the petitioners on who the members of this expert committee should be. Nonetheless, the Solicitor General did take the opportunity to say that statutory bodies such as the ED or the CBI should also be considered and that the Apex Court should not be cynical. What the answer is, well, the Apex Court has reserved its order, and it's only from a few days from now that we'll begin to get more clarity on what the Apex Court thinks is the best way forward for this Adani-Hindenburg saga.
Absolutely. We will have to see what the order says. But the Supreme Court today saying no to the suggestions that have come in from the government in a sealed cover, also saying no to the petitioners. The Supreme Court saying that the Supreme Court will itself set up a committee. Now, remember, as Ashmit was pointing out, the issue here is not the Hindenburg matter. The issue here, one, is of the investor protection framework. And that is what the Supreme Court is likely to look into. But of course, we will know more when we see the final order. Meanwhile, the shares of Adani Group continue to remain under pressure. 6 of the 10 group firms did close higher, though, but despite this, the group has seen its market cap erode by 10,000 crore rupees today. Overall, the Adani Group's market cap stands at 8.5 lakh crore rupees. It's lost now nearly 11 lakh crores since the Hindenburg report was released. Meanwhile, billionaire investor George Soros has questioned Prime Minister Modi's silence and said the controversy can spark the revival of democracy in India, following which Union Minister Smriti Irani hit back, accusing Soros of attacking India and attempting to weaken democracy.
Adani is accused of stock manipulation and the stock collapsed like a house of cards. Modi is silent on the subject, but he will have to answer questions from foreign investors and in Parliament. I may be naive, but I expect a democratic revival in India.
An international entrepreneur who hedges bets against many countries has now declared his ill intentions to intervene in the democratic processes of India.
Well, on to the market action of the day. The Sensex and the Nifty snapping a 3-day losing streak, but did manage to close in the green. The Sensex lost over 300 points. The Nifty lost nearly 100 points today. The Nifty Bank declined over 500 points. And mid-caps also saw sharper cuts compared to blue chips. Well, with earnings season coming to a close, there has been a whole host of earnings downgrades across corporate India in Q3. Prashant is standing by to take us through the big downgrades and some of the upgrades that have come in as well. Prashant.
Well, I have to say that, the earnings trajectory is going in the wrong direction, and one hopes it picks up and takes the right direction. So what are we really trying to do here? The logic is that what matters for stocks and markets is incremental surprise or incremental disappointment. So what we're doing is we've taken what the earnings expectations for, both the NSE, both the Nifty 50 and the NSE 200 were 1 month before. So right before the Q3 earnings season started, what were earnings expectations for the full year FY24 like? And after the earnings season has ended, as earnings continue to come through, how have those earnings expectations moved? So F524, everything that you will see is F524 earnings, but the delta, the change over the last 1 month. So with that said, let me just quickly tell you, for Nifty 50, what the picture looks like. 56% of Nifty companies have actually seen earnings being downgraded for F524. The numbers are on your screen. 28 out of 50 have seen downgrades. 5 saw no change. 6 saw very minor upgrades, between 0 and 1%. There were upgrades in the case of 11 companies. 11, that's about 22% of the companies saw upgrades, whereas 56% of the companies saw downgrades. The biggest, I'll start with the upgrades list because it's a shorter one. The meaningful upgrades were mostly in financials. Bajaj Finserv and SBI up there on your screen, but Britannia and ITC from the FMCG space, and there was a lone auto named Bajaj Auto, which also saw an upgrade. The biggest downgrades coming through in a mix, actually. Divi's, Tata Steel, Kotak Bank, Apollo Hospitals.
Well, we'll come back to Prashant in a second. We seem to have snapped that audio line with him. But our other big story, and this is a CNBC-TV18 exclusive that is now official. It's a deal we told you about that was in the works, and it has happened. Auto component major Minda Corp has acquired a minority 15.7% stake in rival Pricol. Remember, CNBC-TV18 had reported that Minda was on the prowl for a stake in Pricol through a reverse book-building exercise. Matthew Thomas reports on whether this changes the landscape in the auto component space.
So Minda Corp is looking to acquire 15.7% stake in Pricol. Do remember, this they are looking to acquire not from the promoters but from the open market. There is an official communication from Minda Corp that they've managed to acquire 15.7% from the institutional investors.
At 400 crore rupees, Minda Corp's acquisition of a 15.7% stake in fellow auto component manufacturer Pricol took place through the open market. That works out to an average price of almost 209 rupees per share for a minority stake. Now, this has sparked speculation that a hostile takeover may be on the cards. But Pricol, speaking to CNBC-TV18 before Minda announced the acquisition, was adamant that it was not for sale.
I definitely do not want to sell. I'm 1,000% committed to this business. No, they are competitors through one of their businesses, but we have taken away a lot of market share from them. I don't see any synergy in working with them.
Pricol added that it has the numbers to stave off any hostile takeover. As of December 2022, Pricol's promoters hold 36.5%, various mutual funds together hold a little over 4%, FIIs hold 12%, and Singapore-based private equity firm Phi Capital holds 5.7%.
Since then, I have spoken to a couple of our key institutional investors as well, and they are very firmly backing us as well. So if Minda has such a plan in place, I'm not aware of it, and I think we have countermeasures to take them on.
Minda itself has indicated that it is not on the prowl for a hostile takeover. Its disclosure to the stock exchanges after the open market transaction said, and I quote, "This is merely a financial investment without providing the company any special rights in Pricol Limited other than the rights as a shareholder of Pricol Limited." End quote. Interestingly, both Minda Corp and Pricol share an investor in Singapore-based Phi Capital. Shareholding data as of December 2022 shows the private equity firm holding a 4.96% stake in Minda. Now, experts point out that both Pricol and Minda have some overlap in the components they manufacture, especially instrument clusters that include the various displays and indicators that enable a driver to operate a vehicle. Pricol is the world's second largest manufacturer of instrument clusters and fuel level sensors for two-wheelers and three-wheelers, enjoying a 50% market share in the two-wheeler segment and a 70% market share in the commercial vehicle segment. So a combined entity would mean a much stronger player. But for now, with Minda ruling out a takeover bid and Pricol saying it will fight to remain an independent entity, a boardroom battle seems to have been staved off. In Mumbai, with Matthew Thomas, Arundhati Ramanan.
Well, here's the latest in the aviation space. After reporting a strong Q3, IndiGo CEO Peter Elber says the airline is confident about demand continuing to hold. Speaking to me about the company's expansion plans, Elber said IndiGo is expecting deliveries of 43 more aircraft to its fleet in 2023 and is hoping to add 10 to 15 new locations to its network. Speaking on Air India's large aircraft order, the IndiGo CEO said it speaks about India's aviation market growth, adding that India is an upcoming aviation giant.
Third quarter have been a wonderful and good quarter for us, which was actually, to be fair, long awaited for. After all the difficult quarters we had throughout COVID and even the first quarters recovering from COVID, solid demand we're seeking made us to be confident looking to the future. The solid market demand, the upbeat economic situation in India, all these factors make us very confident in looking forward and basically providing a capacity guidance which we set initially for the entire full year 23 in the range of 13 to 17%. Well, we have indeed the supply chain challenges, which is a global challenge indeed. We have taken various measures to address that. One was to extend some of the existing leases and keep some of the fleet in the operation, which we were initially supposed to return. We have introduced a wet lease operation in order to deal with that. Again, all temporary measures to deal with the global supply chain challenges. With the growth of India, with the economic development of India, with the position India is taking more and more on the global stage, and with foreign investments coming in and Indian manufacturers making products here and exporting them, we do see clearly an international growth which is stepping up. I do expect that this 10 to 15 new destinations would be roughly split 50-50 between domestic and international.
And you can catch the entire conversation with IndiGo CEO Peter Elbers at 7 p.m. and 9:30 p.m. right here on CNBC-TV18. We will head into a short break, but up next, after sacking 90% of its India employees, Twitter scales down its operations even further. That and more when we return. Crude oil prices remain mildly under pressure. Brent crude hovering around the 84 mark. This week, crude oil prices have lost more than 2%. Meanwhile, European natural gas futures fell below £50 for the first time in 17 months. This is largely attributed to the increased inflows of LNG from the US and Qatar, offsetting the lack of Russian gas. Oil marketing companies are pressing for a fuel price hike. We learned from industry sources that oil companies are pushing for an increase in fuel prices, citing forex losses and rupee depreciation. This after companies like IOC and HPCL reported losses of over 12,000 crore rupees for the April to December period in FY23. Sapna Das joins us now with more. Sapna, what are oil companies asking for?
Well, indeed, oil companies have made a renewed pitch so that they should be allowed to at least increase prices, at least marginally, if not on products, all products, at least diesel. We are given to understand by the industry that there are still cash losses on diesel. And this is despite some profits that the companies have shown in Q3. Plus, also the forex losses have not been factored in the pricing. And if you look at the forex losses, at least of two of the companies, that's a substantive number, over 10,000 crores. Similarly, in terms of the consolidated loss incurred by the companies in the first 9 months of the current financial year, that number is also significant. So to speak, they are indicating that it's by taking care of other businesses or other revenues that have come in from other businesses, that is how they have been able to recoup the losses in Q3. So the situation is not very pretty, so to speak, and going forward, unless the price freeze on petrol and diesel is not lifted, I suppose this is a situation that's going to continue, especially since Finance Ministry has been very clear, no compensation for petrol and diesel losses.
Sapna, many thanks for joining us. The Income Tax Department has finally concluded its extensive probe at the BBC offices in New Delhi and Mumbai. This after nearly 60 hours, the BBC has issued a statement saying it stands by its colleagues and journalists who will continue to report without fear or favour. Neil Mohan has become the new Chief Executive Officer of video sharing platform YouTube. He joins the long list of Indian origin CEOs leading big tech companies. The 49-year-old has previously worked with Accenture and Google before moving to YouTube. So Neil Mohan taking over from Susan Wojcicki. And speaking of Google, the company has laid off more than 400 employees in India. This is as part of its global cost-cutting drive. Reports suggest an email was sent out to the concerned employees. Now, just last month, Alphabet, the parent company of Google, had announced that 6% of its workforce will be trimmed. And from Google to Twitter, the cost-cutting drive continues. After laying off 90% of its staff in India, Twitter has now shut down 2 of its 3 offices. The Bengaluru office continues to house a few engineers, but offices in Mumbai and Delhi have been shut down. Ritu standing by with more details. Ritu.
That's right. We understand that after laying off more than 90% of its India staff, Twitter has now closed down 2 of its offices in India, and we've been given to understand that these are Twitter's Mumbai and New Delhi offices. The company continues to have a shared office space in Bengaluru, which is its 3rd location in India. Now, this, of course, is part of Twitter's efforts to cut costs globally, and no different from what Twitter has been doing in some of its offices in other parts of the world as well. Now, we understand that only 3 people remain at Twitter India. That is 3 people who are working for Twitter India, and this includes the country lead and 2 other people who are covering the North and East region, as well as the South and West regions for Twitter in India. Now, all of these 3 people, we we understand, are currently working from home and not in offices. Now, Twitter's Bengaluru office mostly staffs engineers who report directly into the US headquarters. So technically, they're not part of the India team, and it is unclear how many of them still remain in the engineering team in Bengaluru. Now, the company's been in a bit of a flux since Elon Musk's $44 billion takeover and seen a massive drop in revenues. While Musk has hinted at bankruptcy in the past, in late 2022, he did claim that Twitter was no longer in the fast lane to bankruptcy, but it still wasn't secure.
Ritu, many thanks for joining us. And with that, it is time for us to wrap up this edition of Business 360. Thanks very much for watching. Do stay tuned to CNBC-TV18. Our Friday special Editors Roundtable is coming up next.